What's up guys and welcome back to Wall Street Millennial. On this channel, we cover all things stocks and investing. In this video, we're going to go over the greatest gains and losses on the Wallstreetbets forum over the past week so we can learn from other people's experiences. Before we get into the video, we'd like to thank our channel members who get access to these videos one day in advance and also get to vote on some of our video topics. First, we have user Dr. Dark Piccolo who turned $10,000 into $200,000 in just 1 week. Many so-called experts think that AMC stock is worth almost nothing because of the company's high debt burden and secular headwinds facing the movie theater industry. Despite this, under the leadership of the silverback Adam Aron, the Wallstreetbets apes have successfully pumped up AMC's share price, which has more than doubled in the past week in an apparent short squeeze. This has amounted to $1.3 billion of transfer of wealth from short-selling hedge funds to retail traders who were long the stock. One of those beneficiaries is user Dr. Dark Piccolo, who is up 5,900% or $203,000 in the past week. This is quite an impressive gain for an account that just started at $10,000. He held $30 and $40 strike calls expiring on June 4th and 18th respectively. While his calls are still out of the money, his cost basis was so low that gains have been exponential as the stock price has moved closer to his strike prices. As expected with a meme stock game porn, the comment section was largely supportive of this trade. Next off, we have user OpenCall69. After seeing the epic gains of meme stocks since the start of 2021, this Wallstreetbets user wanted a part of the action. He went on the subreddit looking at which meme stocks had the most hype so he could pick one stock to YOLO his account into. Over the past few months, the three most hyped meme stocks were AMC, BlackBerry, and GameStop. After some careful consideration, he decided that BlackBerry was the best bet and went all in on BlackBerry calls. In January of 2021, at the height of the initial GameStop short squeeze, he took his dad's life savings and went all in on the company. He bought 3,000 shares of BlackBerry at a cost of about $20 each. He also bought 60 Leaps call contracts with $25 strike prices expiring in January of 2022. In all, his total investment was about $115,000. This was a true YOLO for this Wallstreetbets user and his family. His highly levered BlackBerry position promised to yield a binary outcome. In 1 year's time, he'll either be enjoying retirement on a luxury yacht or be on food stamps. He bought into the position at the height of the short squeeze in January. Unfortunately, BlackBerry has failed to hold onto its gains and has since fallen 50% to $10 a share. While this is still above its pre-squeeze levels of $6, it's a far cry from the $25 strike price of his calls or the $20 cost basis of his shares. Currently, his Leaps have decreased in value by 94% and his shares have decreased by 45%. This adds up to a total loss of $80,000 or 70% of his initial investment. To add insult to injury, Wallstreetbets users lucky enough to have chosen GameStop or AMC instead of BlackBerry have instead made massive tendies during the same period of time. GameStop has had strong price support as the apes refuse to sell. Its current price of $222 is not far off from the short squeeze highs. AMC has done even better. After a recent rally, its stock price is more than 30% above the January highs. Choosing a meme stock is a bit like rolling the dice in a casino. Some make massive tendies while others lose almost everything. Next up we have user Rational Meat Popsicle with a $14,500 gain on AMC options. He is long 9 contracts of $3 strike calls on AMC, not expiring until January of 2 years from now. They are already far in the money, netting him $14,500 of pure profits, and there's more than a year and a half left till expiry. His average cost basis was $7.50 per option, which means that he almost certainly bought them when AMC stock was around $10 a share. Now, AMC is above $26 a share, smashing Wall Street projections and more than doubling since the OP put on his position. An interesting thing to note is that if he had bought stock at the time instead of calls, his cost basis would have been about $10 per share, compared to $7.50 for the options. Considering a current share price of $26 a share, that would be a 160% gain. So using options instead of stock actually hasn't magnified his gains by that much, only up to 212% compared to about 160% for stocks. This is probably because the options are so in the money with a strike price of $3 that the original cost basis was already pretty high. One issue that people who have made successful YOLOs have to deal with is deciding when to sell. The OP doesn't know if it is better to ride it out till expiry or try to time the peak and then move the equity into the next stock. The most highly upvoted response is that when to sell is a highly personal question, taking into account things like your general financial condition overall. If you don't have that much money in savings, it might make sense to sell at least a little to lock in the gain. However, if the $14,000 gain wouldn't really move the needle in either direction for your net worth, it can make sense to write it out till expiry. It's all personal preference. But when in doubt, there's always the option of just following the Wallstreetbets rule of thumb, which is if it's good enough to screenshot, it's good enough to cash out. Congratulations on your massive gains. Next, we have a comically bad options play by the self-proclaimed worst option trader in the history of option trading, user Alphin Dave. His trading history was a series of buys, huge unrealized losses, then a paper-handed sell right before a huge jump in the stock price. He bought a total of 500 contracts of AMD calls expiring in a couple of weeks, including at the bottom on May 17th. However, after losing his nerve on May 27th, he dumped all 500 contracts at just 93 cents per option, netting a loss of several $100s overall. However, if he had just had the balls to hold for a few more hours, he would have been able to sell all 500 of those contracts for between $2 and $2.50 per option, which is roughly a doubling or more of his cost basis. That's the one time you don't want to see your stocks or calls go up. As painful as it is to see potential gains that you had already dumped, it's even worse to actually lose money. User Subject Purchase 3042 says that he lost $500,000 in the past year while the stock market has been in a historic bull run. What do you guys think is worse, losing money while the rest of the market is making money, or selling a stock right before it moons? Let us know in the comment section below. Next, we have an example of the quickest way to lose money in the options markets, and that is 0 days till expiry options. User I Am Mike Centers tried to get in on the GameStop gold mine with a get-rich-quick strategy and bought 60 contracts of GameStop calls. The strike prices of the calls were $300 and $340, which was extremely out of the money at the time, considering that they were expiring the same day. Usually, the price of GameStop calls is very high because the implied volatility of GameStop stock is so high, which means that the stock is expected to move either up or down by a lot in any given time period. However, when this trader bought the calls, it was so close till expiry that it only cost him about $1 each. Sure enough, GameStop did not go up enough to put any of his calls in the money, and they ended up expiring worthless on May 28th. All in, it was a $7,000 write-off in a straight line down for this trader. Usually, Wallstreetbets is sympathetic to traders who long GameStop and lose money, but in this case, the idea of buying out of the money calls on the day of expiry showed a little bit too much lack of IQ. Hopefully this experience will teach him how to better protect his principal in future trades. Alright guys, that wraps it up for this video. If you like the content, make sure to smash that like button and subscribe for future videos. Also check out our second channel, WSM Research, where we post DD on high growth stocks. In the meantime, thank you guys so much for watching and we'll see you in the next one. Wall Street Millennial, signing out.